Look at me. If you are retired, or if you are getting ready to hand in your resignation and step into the golden years of your life, you need to listen to me right now. This is the time in your life when you cannot afford to make mistakes with your money. Do you hear me? When you are working, you can recover from a financial blunder. You have time, you have a paycheck coming in next Friday. But when you are on a fixed income, when you are living off your hard-earned nest egg, your primary goal must be the safety and security of your money. Protecting what you have is your number one priority. Lately, everybody is talking about digital banking. You see the advertisements everywhere. Your kids are talking about it. Your friends who travel are talking about it. They say, "Oh, look at this app called Revolut. It is so easy, you can swap currencies, you can spend money abroad with no fees, it is the future." And you sit there and you think, well, maybe I should do that. Maybe I should put my retirement money there to save a few dollars when I take that trip to Europe. Stop right there. We need to have a serious, honest talk about the disadvantages of using Revolut, especially for someone in your stage of life. I want you to understand exactly what you are getting into, because what works for a 25-year-old backpacker might be a financial disaster for a 65-year-old retiree. Let's start with the biggest problem, and it is a question of pure safety. Where is your money actually sitting? If you walk into a traditional brick-and-mortar bank in the United States, your money is protected by the FDIC up to $250,000. In the UK and Europe, you have similar government-backed protections like the FSCS. If that bank goes under, you sleep well at night because the government has your back. Now, let's look at Revolut. Depending on exactly where you live in the world and what type of account you open, Revolut might not be operating as a fully licensed, traditional commercial bank with those exact same instant protections. In many places, they operate as an electronic money institution. What does that mean for you? It means your money is safeguarded in a separate account at a traditional bank, but if something goes horribly wrong, or if there is a technical freeze, you do not have that immediate, seamless government safety net that you have known your entire life. Are you willing to risk your life savings, the money that is supposed to buy your groceries and pay your medical bills, on a company that handles your money differently than a traditional bank? I don't think so. You need to know that your money is safe, secure, and fully insured, no matter what happens to the company holding it. That brings us to the deepest fear that keeps retirees up at night, losing control and not being able to fix it. Imagine this scenario. You are traveling, or you are trying to pay a major bill, and suddenly you lock yourself out of your phone. Or worse, the automated security algorithm inside the Revolut app flags one of your transactions as suspicious. It happens all the time with these digital platforms. Suddenly, your account is frozen. Your money is locked. If this happens at your local bank down the street, what do? You get in your car, you drive down there, you sit across the desk from a human being named Linda or Robert, you show them your ID, and you get it fixed. You have a relationship. But with Revolut, there are no branches. There is no physical building to walk into. There is no face-to-face comfort. Everything is handled inside a smartphone app. If your account gets locked, you are at the mercy of an online chat function. You are typing your fears into a little screen, praying that the person, or the artificial intelligence robot, on the other end understands your problem. If you want high-tier, priority customer support where you can actually get a human being on the phone quickly, do you know what Revolut makes you do? They make you pay a monthly fee for one of their premium subscription tiers. They are charging you a premium just to get the kind of customer service that you should be getting for free at any reputable institution. When you are retired, an account freeze isn't just an inconvenience. It is a crisis. You cannot afford to be locked out of your money for days or weeks while waiting for a chat support agent to review your documents. Now let's talk about the fees, because people think these digital apps are entirely free. They are not. Revolut loves to talk about how great they are for international currency exchange, and it's true that during the week, their rates can be very competitive. But what happens on the weekend? The financial markets close on Friday night and don't reopen until Monday. Because the markets are closed, Revolut adds a markup fee to currency exchanges on Saturdays and Sundays to protect themselves against market fluctuations. If you are on vacation and you spend money on a Saturday, or if you exchange currency over the weekend, you are paying extra. On top of that, if you stay on their free standard plan, there are strict limits on how much cash you can withdraw from an ATM each month without paying a steep penalty fee. Once you go over that limit, they hit you with a percentage fee on every single dollar or euro you take out. For a retiree who prefers the security of having cash in hand while traveling or running errands, these limits can sneak up on you and drain your pocketbook. You also have to look at the sheer complexity of the app itself. When you open a traditional bank account, it does a few simple things. It holds your money, it pays your bills, and it gives you a debit card. When you open the Revolut app, you are bombarded with options. They want you to buy cryptocurrency, they want you to invest in stocks, they want you to buy insurance, they want you to track your rewards. It is busy, it is complicated, and it is constantly trying to upsell you. At this stage in your life, simplicity is your friend. Complexity is a breeding ground for mistakes. One wrong tap on a smartphone screen, and you could accidentally buy a volatile digital asset that you don't want and don't need.